Welcome to the Momentum Monday, the last Momentum Monday for 2018.
Happy New Year, buddy.
Happy New Year. It's almost New Year's here, just 6 hours from the New Year's. I mean, I'm 9 hours in the future.
I've never seen you smile like this. Are you drinking already?
What? I'm sorry?
Are you already drinking?
No, I haven't had anything yet, but I will in a bit after the show.
I've never seen you smile.
I've had a really good week last week. I made a lot of money. So.
You've done a great job. You've done a great job since, well, always, but since September, I think you've managed to sidestep most of this. How are your subscribers feeling? Do you think they were able to listen to you, or do you think people just can't help themselves?
I think most of our subscribers are pretty happy and with our work, and we're looking forward to the next year to provide even more value to them.
What's the feedback been? Were people listening, and did they take some of your shorts?
Yeah. I think most people are happy, and they've utilized our market timing advice, and I mostly see positive feedback.
All right, so we got the new site to show people.
All right, let me share my screen, and here we go. We just launched an updated version of Market Wisdom, so we can include a special section for Howard's long-term ideas here under Howard's portfolio. So Howard will be sharing one new long-term idea a month, and that idea will go here under Howard's portfolio under that section.
Okay, great.
We have the swing trade ideas, which are my ideas that I share on a daily basis, and then we have the Momentum 50 list, the previous SO50 list. Then we have market research, where we share our analysis. And Howard's long-form work, it will also be here.
Yeah, it'll be like a couple thousand words once a month with an idea. You want to click people through. They've loaded my old portfolio from Peloton.
Yeah.
So I'll keep running that as well.
Yeah, this is Howard's remaining open position from his Peloton newsletter. As you can see, many of them have been partially closed. There's some cryptocurrency positions, and
if we click through the close, we can see that we were selling on the way up, which I think in hindsight, we've booked some huge gains in crypto, and our remaining crypto is a mess. But I'm not really nervous about that because that was venture capital type ideas. But you can see, I mean, our probably average returns was over 80%.
Yeah, you had a great year. Before you quit.
We're gonna keep that up. We aren't going to rush ideas. This market is not my type of market. It's non-trending. So, but people will be able to log in here, and if they have problems, Ivan, they can just clear the cache. You'll just reach out to Ivan at.
Yeah, it's support@marketwisdom.com, and I'll help you.
All right, let's get to the markets. Walk us through where you think we're at.
Well, I mean, let's explain what I'm currently seeing. I think in October and November, I mean, even September, the S&P 500 spent 7 weeks in that box between 280 and 260. And then when it broke below it, it tested it a few times, and then when it broke below it 2 weeks ago, it dropped, 30 points, 25 points in 7 days. Then market breadth reached extremely oversold levels not seen since 2008. So I think only at some point only 1% of stocks were above their 10-day moving average, and they were just gold and utilities stocks. So we had our oversold bounce in the last few days, and my theory is that in the next few weeks, most likely we'll continue to see a range bound price action, where the S&P will probably trade either between 240 and 260 or between 230 and 250. And a market that has been high correlation market maybe will become a little bit less correlated, and we'll see some stocks starting to stand out. As today we see that with some biotechs and with some enterprise software stocks. What do you see in the current market, Howard?
It's not my type of market, so I don't want to trade ranges. It looks like it'll be a long time before I pass the baton, or I try and even take the baton back from someone like you who can swing trade this. Let's go right to the moment. Range-bound markets, catch up on other work. I think what people have to realize is it could be a long time before we see some real strength. I think Ivan's pulled up a chart of Atlassian, which is in the strongest sector, and they make a development product called Jira, Jira. Pretty much most of Silicon Valley and startup teams use the product. And Okta, which is a single sign-in security software product, is kind of the leader in the space. So the enterprise stocks that led into the correction continue to lead. Workday is in the human resources, human finance section, and then MongoDB, which is a database company. So thin pickings. This is not new information. The trade desk is more of an ad is kind of a marketplace for ads, Ivan. I don't know if we'd call that. The problem with the trade desk is, as soon as markets crack, a lot of the industries, people stop spending money if there's a fear of recession. So even something like the trade desk will get killed. HubSpot and Zendesk maybe they've double bottomed here as we look. Zendesk is in my model portfolio. We've obviously sold a lot on the way up, but it's kind of holding these lows. So if the market does turn, you can see that the stocks we just shared are the ones that should start breaking out to new highs again, which is exciting, but at the same time, these stocks had all doubled and tripled already. Now, but that doesn't mean they won't double again. So that's where the strength is. Ivan, do you see anything else to, Disney is my, Dow idea of the year. Kind of crashed out with the market, has quickly kind of bounced back into resistance. Below 100 is, all bets are off for me. I don't think there's a rush to own it again. I don't own it at the moment. Above 120 is my goal. Where this, if they can get their Disney flicks going and the market doesn't crap out, I think Disney can take out its all-time highs. That's one of my predictions for, not a sexy prediction. Netflix is going to be the leader for a very long time. They have the money to spend. They're just, it's scary to look at it on a monthly because the stock was, has had such a good run, but it has pulled back, almost 40%, even though it doesn't look like it on the charts. This is, second or third largest pullback in its history, but it's coming from, a $400 price point. So it's not cheap, but I think what Netflix has, I've been considering it as an addition in the 8 to 80 portfolio, but I just don't love the market. I think I'd rather pay up for Netflix. That's where I'm at.
I thought Netflix was
It is, but I haven't added any.
I think that at this point, Netflix as a product, as a service, is unstoppable. I talked to a lot of people here in Europe, in Germany, in Bulgaria, and Netflix is coming strong, and there's just no substitute, and no one is even close to it. There are so many people switching, and it's so cheap, and they provide amazing content. So I think for the next few years, it has so much growth.
Yeah, I don't mind paying up it is down, 35, 40%. I just want to see the market firm up. I'm in no rush. As a momentum investor, I don't need to pay the bottom prices. Apple, I tried that with Apple, and it did not work. And be a faster growing company, and that's probably it's probably, if you have not. Okay, I would say this: if it's your first time looking at stocks and you want to buy an 8 to 80 brand today, I do like Apple and Netflix, but I may even try Netflix first, just because they have such an attention gap and so little competition on Netflix, and they have pricing power. Meaning, I think Netflix can raise prices. Plus, they're launching movies in 40 languages, so and they're not being sued by the government, which Apple is for antitrust with the iTunes store. So I think Netflix over Apple at these prices. If I wanted to dabble in 8 to 80 brands, so that would probably be my favorite idea. All right, Ivan, walk us through if there's anything that looks interesting to you.
I mean, at this point, I'm paying attention to just a few enterprise software stocks that are holding well, but in this market, you cannot really trust breakouts. You just need to play the ranges if you're a swing trader. Also, there are a few biotech names that got really oversold, and I think that, for example, earlier today I tweeted about Biogen. I think they have a room to test their 200-day near 3.
But I mean, Amgen's much stronger, which is my boring go-to. I mean, it's back above its 200-day. Vicious 2 sell-offs. But if you want to trade against that 180 price point or against their 200-day, but again, there's so many flat to downward moving 200-day moving averages. Can you pull that up on the SPY? I'm in the 200-day.
Yeah, that's why I'm saying that you have to play the ranges in this market. It's hard to trust breakouts and breakdowns unless you're really short-term trader and you do it intraday or something like this.
People are asking why I don't own many stocks. As well, the market spent a lot of their time above the 200 days. So for a few months or 6 months or whatever it takes for the market to get back above its 200-day here is why mess? So much time when stocks get back above their 200-day moving average to make money, and that's just quite simply a very simple rule for people who want to be active investors that don't want to trade every minute. You just have to. There's months at a time where you just can't do very much. That's it for me, Ivan. I think we'll just keep checking back on the breadth and the 200-day moving average as we get closer.
Yeah, I think for most people that are not active in the market, they should just continue to dollar cost average every month, and for active traders, you just need to play the ranges. I mean, there's not much to say other than in this market environment, most breakouts and breakdowns are likely to fail, so keep that in mind. That's it.
All right, buddy. Have a great New Year, and we'll talk next week.
Yeah, you too, Howard. Talk to you next week.